Welcome to the deep dive. Today we're taking a closer look at Oklo Inc. They're a company that's really making waves in advanced nuclear energy. Okay, so our mission today, it's really to cut through all the noise surrounding Oklo. We've got, their Q2 2025 financials, investor decks, call transcripts, plus market takes from places like Business Wire, Barron's, investing.com, NASDAQ too. And the goal here is simple. Extract the key insights. We want to help you understand this company, they're pre-commercial, in a super complex field without getting totally bogged down in every single technical detail, keeping it simple.
Yeah, that's exactly right. There's just so much information, isn't there? Especially when you mix financials with really deep tech development. So our aim today is just clarity and context, taking this flood of data and turning it into clear, maybe even actionable insights for you.
All right, let's dive in. The hard numbers first. Their Q2 2025 results, what did they actually, show on the surface?
Okay, financials. So Oklo reported an EPS that's earnings per share of -$0.18. Now that missed the consensus estimate, which was closer to -$0.12.
Right.
They also showed a quarterly net loss somewhere in the, let's say, $24 to $28 million range.
Okay.
And what that tells you directly is, well, they're still pre-commercial. They're losing money, basically no real commercial revenue coming in yet.
So yeah, on paper, unprofitable, no sales. For a lot of companies, that would sound like a pretty big red flag, wouldn't it? How do we look at that for a company like Oklo? I mean, they're building something for the future, not really selling widgets today.
That's a really important distinction to make. And what's interesting here is that this profile of the losses, the zero revenue, it's actually pretty typical for an early-stage high-tech developer. Think about it. They're pouring money into R&D, engineering, setting up operations. They're literally building the future, like you said. But what balances that picture out, and this is really key, is their cash position, their liquidity. The company's reporting substantial cash and securities on hand. Analysts call it their cash runway.
How long they can keep going.
Exactly. How long can they operate before needing more money? And we're talking hundreds of millions available, roughly. Market commentary, from investors, Business Wire, they flag this. They see it as a significant buffer for the near term. It gives them that crucial time they need to fund the work, develop the reactors, get them deployed. So yeah, in this context, maybe not the red flag it seems at first glance.
Okay, so a decent cash pile helps offset the losses.
Got it.
Right.
But then what happened? What really kind of flipped the script and made the stock jump, even with those financials?
Yeah. This is where it gets really interesting. The major catalyst, the big news, was Oklo getting selected by the U.S. Department of Energy, the DOE. They were picked for an accelerated pilot program, named among just, 11 startups? Chosen for this big push to actually build reactors by mid-2026.
Mid-2026, wow. Yeah. And Barron's called this out a huge policy win, a catalyst. Oklo's specific design, their advanced fast reactor.
Yeah.
It's known for being compact, using recycled fuel. That helped it stand out. For a company at this stage, getting that kind of government nod, it implies really strong political regulatory tailwinds. That's genuinely rare and super valuable. It's a powerful signal.
Okay, so a massive vote of confidence from the government. What did Wall Street think? How did the analysts react? Did they see this as the game changer?
Oh, definitely. The reaction was fast and very positive, which really helps explain why the stock moved up. Despite that earnings miss you mentioned, you had firms like Wedbush, others too. They didn't wait around. They raised their price targets, reiterated their bullish calls on Oklo.
So they doubled down.
Exactly. They pointed specifically to the progress on licensing. And crucially, this huge government support as the key reasons. Wedbush, I think, lifted their target to somewhere around $80. So yeah, that wave of positive sentiment from analysts, it definitely helped lift the stock, gave investors a solid reason to look beyond the current losses and see the long-term potential, simplified by that DOE backing.
Okay, so we've got the numbers, the loss, the cash, and we've got the big news, the DOE selection. Let's try and synthesize this now, bring it all together. What's the full picture? The core strengths, the immediate hurdles, the big risks. Let's break it down. The good, the bad, and maybe the ugly. What's the good here?
Okay, the good. From a wider view, there are some really strong points. First, like we just talked about, that policy and political momentum. The DOE selection, plus you have the current administration really focused on speeding up advanced nuclear. That significantly improves Oklo's outlook for regulation, for funding.
Yeah.
Barron's pointed this out, direct government backing like this. It's pretty unique for a nuclear startup. Really valuable, opens doors, gives legitimacy.
Right.
Second, their cash runway. We touched on this, but it's a big positive.
Yeah.
Hundreds of millions in cash and securities. That's a crucial buffer. It gives them time to execute on the engineering, the licensing, the early construction, without that immediate pressure to, raise more cash or dilute the shares. Analysts see that as a real advantage in a capital-heavy industry like this.
Makes sense.
And third, I'd say their market positioning. Oklo's specific reactor design plus their unique model, the build-own-operate approach.
Explain that quickly.
Sure. Basically, Oklo handles the upfront cost of building the reactor and then sells the power to the customer. So the customer, like a data center, doesn't have that massive capital hit up front.
Okay, interesting.
Yeah, and it's getting positive attention, especially now when you see this huge demand for reliable, clean power for things like, well, data centers, industrial sites. They need that carbon-free energy.
So definitely some strong points in their favor. But let's look at the flip side. What are the immediate concerns? What falls into the bad category?
Okay, the bad. It really boils down to a couple pretty straightforward financial facts right now. First, they are still unprofitable pre-commercial. Like Business Wire confirms, the company is still burning cash, no significant revenue coming in the door yet. So investing in Oklo, it's still very much a play on what they might do in the future. It's about execution potential, not current cash flow. You're betting on the come, essentially.
Oh, future focused.
Exactly. And second, related to that was the earnings miss. That Q2 EPS miss, it just underlined the high cash burn. Now, that's not totally unexpected for a company at this stage, right? But it highlights the heavy spending on R&D, on operations. Investing.com noted this. It just means simply more money is going out than coming in right now, as expected, but still a reality.
Okay. Strong strategic spot, government help, but still spending heavily. Now, let's get real. What's the ugly? What are those significant material risks that could potentially derail things?
Right, the ugly. These are the big risks you just have to understand in this sector. First is regulatory and safety risk. Look, pushing for faster reactor timelines is exciting, but it does raise some concerns. Critics worry about fast-tracking the NRC Nuclear Regulatory Commission licensing. The safety review is complex stuff. Barron's mentioned that experts have questioned, potentially relaxing standards just for speed, and serious safety hurdles, regulatory gates. They absolutely remain. This isn't an industry where you cut corners. Precision and caution are everything.
Very true.
Second big one is execution and timeline risk. Even with the DOE backing, actually building these commercial small modular reactors, or SMRs.
Those compact factory-built ones?
Yeah, exactly. Building them on schedule. It's incredibly difficult, technically challenging, logistically challenging. Barron's makes a point. If they start missing milestones here, you'd likely see pressure on the stock pretty quickly. It's a massive engineering task. And finally, there's valuation volatility. The stock's already had a pretty big run-up this year. Market beat data suggests, any hiccups in execution, maybe an unexpected need for more funding, which could dilute shareholders. That could lead to sharp drops. It just means high volatility. The ride could be quite bumpy for investors.
So putting it all together, it really is a fascinating high-stakes situation, isn't it? But understanding those three buckets, good, bad, ugly, it really does help simplify things. It gives you that balanced view without drowning in the details. Okay, so this is clearly a story in motion. For anyone following Oklo or just curious, what should we be watching? What are the concrete signs of progress or maybe potential trouble ahead?
Good question. To keep it focused, here are the key things to watch. First, DOE Pilot Program details and milestones. We need specifics now. Contracts, funding details, actual timelines for that DOE program. Need to see concrete steps beyond just the announcements.
Right, the follow-through.
Exactly. Second, keep a close eye on NRC and licensing updates. Any approvals, permits, milestones, or delays, especially around their work with Idaho National Lab. That stuff directly impacts timing and viability. It's a critical gate.
Okay.
Third, watch their cash runway and capital expenditure plan. Check their next quarterly cash burn rate. Are they planning to raise more capital? Any new partners announced? That cash line on the 10Q in press releases, it's vital. Business Wire usually covers that. And capital expenditure just means what they plan to spend on big things like reactor parts or facilities.
Got it. Cash and spending.
Fourth, look for customer or offtake agreements or commercial pilots, actual deals, agreements to power data centers, utility contracts, specific site deals announced. That significantly lowers the risk around future revenue. Offtake agreements especially, those are commitments from customers to buy power down the road. Those are really strong signals of future success, as investors have pointed out.
Real commercial traction.
Precisely. And finally, fifth, keep tracking analyst notes and target changes. What are the big sell-side firms saying? The investment banks doing research. Commentary from places like Wedbush matters. Upgrades can fuel momentum. Downgrades can trigger sell-offs. Investing.com is a good place to see that sentiment.
Okay, those are really clear, tangible things to track. That helps boil down a lot of that finance and tech jargon into like real checkpoints for you, the listener, so you can follow the story without needing, a PhD in nuclear physics.
Yeah, and if you step back and connect it to the bigger picture, Oklo's situation is kind of a classic example, really. An early-stage clean energy developer. They face those big R&D costs, operating losses, almost no revenue yet, but they have that substantial cash cushion. And critically, that rare catalyst, the DOE pilot selection, that combination, that's why analysts are generally bullish, even while the stock itself remains pretty volatile. It's all about future potential right now.
And it really highlights that tension, doesn't it, between pushing innovation forward quickly and sticking to established, rigorous processes. It is, like you said, a high upside, but also high execution risk kind of play. Good news can send the stock flying. But missed steps, regulatory hurdles, those could erase gains just as fast. So what does this all mean for you?
Well, it suggests that sometimes the simplest way to grasp a complex situation like Oklo's isn't about memorizing every single number or technical spec. It's more about understanding the core forces pulling in different directions. The promise of the technology itself, the clear market need, the government's strategic push towards certain energy goals, and always those inherent risks of actually executing and navigating the regulations in these cutting-edge fields.
And that really surfaces a bigger question, doesn't it? In this era where we're trying to accelerate these incredibly complex, critical technologies for climate, for energy security, how do we effectively balance that drive for speed, for innovation, with the absolute need for rigorous safety checks and careful regulatory oversight? It's definitely something to think about, maybe something for you to ponder as you watch how advanced energy continues to evolve so quickly.
Absolutely. And perhaps a deep dive for another time. Thanks for joining us today as we unpacked Oklo. We hope we've helped you feel a little more informed, maybe simplified things just a bit.